Hello everyone and welcome to today's presentation with Bulten, where Axel Berntsson, President and CEO, and Anna Åkerblad, CFO, will present the Q2 report for 2025 and answer questions during the Q&A. If you're calling in, please press star 9 to raise your hand and star 6 to mute yourself when you get the word. You can also use the form located to the right. And with that said, please go ahead with your presentation.
Thank you. Welcome to our Q2 presentation. We have a fairly short agenda for today, so we give you a summary of Q2, quick view of the market development, and then we go through our financial results, and then we sum up and talk about the future in the end. So with that said, we move on. So if you sum up our second quarter, I would say that it was broadly in line with both the prior year and previous quarter. And I think this is quite good given that we saw softening volumes from the automotive sector, while at the same time we did see a strong improvement in our medical technology and consumer electronics segments. So it's nice to see that we are able to maintain margins even though volumes are lower. During the quarter, we've spent quite a lot of time with our strategic review, and we have launched a more detailed process and program around that, where we are focusing on our footprint, on our organization, and how we allocate our resources for the future. If we look quickly about the markets, we usually show a few slides on the automotive sector, but I think they are a bit too broad. Looking at automotive in general, we do foresee a soft market with kind of zero or slightly positive growth globally, which is a little bit driven by Asia, whilst European and North American markets will be very low on growth. However, we do have other areas that we focus on and will focus more on for the future. So if you look at medical technology and consumer electronics, those markets actually have a quite sound underlying growth, and we are fairly competitive here and have very good margins. So this is an area where we will put more focus for the future, and that is developing very well for us. If we move forward, I'll leave over to Anna to give you some financial highlights.
Thank you, Axel. And here is an overview of our quarterly sales the last years, including 12 months rolling sales. And sales volumes for second quarter was down over 8% versus same quarter last year. And this is following our customers' pattern, where some of them did not produce for export due to global customs discussions in the beginning of the quarter, which is also reflected in the order intake. However, our sales is still on a relatively stable level in a more volatile market. And in this waterfall, you can see the change in rolling 12 months sales for different customer groups. And there is a positive growth in other industries, the slight decrease in the rest of the customer groups. And the customer group other industries has, with this, increased sales with 9% compared to last year rolling 12 months. And as a proportion of rolling 12 month sales, other industries outside automotive amount to over 14%. And this is an increase compared to last year when it amounted to over 12%. Our main customer group, OEM light vehicles, amounts to 61% and is in line with last year. The second quarter delivered an adjusted EBIT of 69 million SEK, which is equal to 5.2% EBIT margin. And the quarter was in line with both last year and previous quarter. Adjusted earnings per share for the quarter was down to 1 SEK and 3.1 SEK for the rolling 12 months. Looking at the cash flow and net debt, we have amortized debt with cash and hence the negative cash flow from financing activities. Cash position is lower than last year's quarter, but in line with the end of last year when taking out exchange rate effect. Net debt excluding lease liabilities is higher than last year, but more in line with year end. Our Adjusted key indicators for rolling 12 months are in line with last year or slightly below. The adjusted net debt in relation to adjusted EBITDA is in line with last year at 2.3. Our guideline for average net working capital in relation to 12-month sales is about 20 to 25%, depending on growth pace. At the end of the quarter, our rolling 12 months are at a level of 16.7%, which is a good level and in line with last year. CapEx as percentage of sales is slightly above our guidelines, and this is related to catch-up of previous years where CapEx were held at a low level in combination with timing of completion of larger production equipment and efficiency investments. Depreciation as percentage of sales is in line with our guidelines. Now back to you, Axel.
Thank you. Crisp and quick. All right, so if we sum this all up, then we can see that our net sales declined by 8.8%. But I would say that through this disciplined cost management and very good control of our operational expenses, we were able to keep EBIT in line with last year. And even though we did see a decline in the passenger vehicle segment, we are quite happy with that we have had quite a few wins in both in Europe and Asia in our more higher margin businesses, particularly in C-parts, microscrews, and with VMI solutions. I think this is a good step forward for Bulten, where we're winning in the areas where we make more money, and that is kind of positive for the future, I would say. If we then take a quick glance of what we are now spending our time on for the rest of 2025, the first thing is to sharpen our focus on the high growth, high margin markets like we just saw on the previous page. And that includes then the medical technology and consumer electronics businesses, and also into more niched products where you have an opportunity to have higher margins, as well as when you do more value-added services towards your customer, then you create more value and you have an opportunity to make more money. And this is very much in line with our ambition to grow beyond the automotive sector and increase our profitability long term. Secondly, we are spending a lot of time at the moment to define how to best evolve both our incentive, our governance structure, and overall organization structure to support more of a decentralized, customer-centric model at Bulten. Thirdly, we are reviewing our footprint and a lot of other topics. Basically, what we want to do with all that is to create more financial strength so that we can invest in acquiring more companies and having a profitable growth for the future. And for that, we need firepower, and we are spending quite a lot of our time to analyze different opportunities to realize that, basically. I think that's what we had for you today as a presentation. With that, I'll leave over to questions.
Thank you very much for that presentation. And yes, let's open up the Q&A section here. If you're calling in, please press *9 to raise your hand, and then *6 unmute yourself when you get the word. You can also use the form located to the right. And we'll start with the first question here. Or we have Mats Liss from Kepler Cheuvreux. Please go ahead. You have the word.
Okay, hey, thank you for taking my question. Well, you mentioned the order intake during the quarter were sort of affected quite substantially during the beginning due to global tariffs, and then sort of the headwind eased during the quarter, and you finished somewhat better, I guess. Could you say something there about how you have third quarter have started now, or maybe also if you should expect it to be more in line with previous quarter? I mean, somewhat seasonally affected by the holidays and so on.
I would say in general, Q3 is a weaker quarter most years, historically, due to shutdowns at our customers' plants and so on for a lot of maintenance and things like that. But that aside, Most of the drop that you saw on order intake, which is a quite big drop, the vast majority of that is from one customer that decided to stop deliveries to North America in the beginning of all these custom duties changes and insecurities in the beginning of the quarter. And that customer has now resumed all the production, is producing at full speed again, which means that big drop isn't real, if you say, for the long-term volumes. From what we can see in the projection from the customers, they remain on the same plan as they did before the custom duties started to arise. So today we don't see major concern around that.
So yeah, great. So it seems that things are moving somewhat better. Then, well, looking at the gross margin, it's sort of improved there, and I missed the reasons why, but I guess it seems that you have a pretty good pricing, I guess, and maybe also if you can touch upon the mix change there, if that also helps the gross margin, the mix change towards non-automotive segments.
Yes, in general, the non-automotive segments have significantly higher gross margins than the automotive. And over time, as we grow that portion, we should expect a higher gross margin in the business.
Good. Then, well, maybe also coming back to the tariff impact, could you shed some more light on how that could affect you, given the current indications of tariffs, well, U.S. tariffs on European imports and so on?
I think on the European business, it is no major impact, but we do follow. I mean, if you follow the large customers that we have and you see their volume projections and their volume deliveries, we kind of follow that in Europe, as most of the business that we have in Europe is automotive, and a lot of it is light passenger vehicles. So we will follow those trends, and there's no major effect from tariffs on that yet, but there's some. If you look at Volvo, I think they were down 9% year to date overall in their volumes. And we are down slightly less than that year to date, but we follow that trend. If you look in our Asian businesses, we haven't really seen a major effect on that yet, but it could be effect in the future if there's a lot of production that would move to the US. I don't foresee the consumption in the US will go down dramatically, and I do foresee it will take quite some time for all this manufacturing to move elsewhere. So sooner or later, that volume should still be there, if you will.
Great. Then, well, the other lines there in the P&L, the tax rate is still a bit above what I would like it to be. Could you say something about that?
Of course, it's our procedure is that we do not take into account the deferred tax losses carried forward. So when we do that calculation, we are at a healthy level as normally at around 25-26%. So that is the reason why, and we are confident that it is at a good level.
So going forward, or should we expect 25-26% more than the current level?
That is when we do that calculation of. I mean, we have this really when we do the adjustment, but we do not take that into considerations in the calculation during the other quarters as well. So we will, when we do the calculation, adjust it, then it will be around 25-26.
Oh, okay, great. And finally, just this non-controlling interest there. Could you just shed some light on what they are? Oh, what they are about.
Yeah, we have JVs that is in that line, and we have JVs in different countries. So we have both in Asia, and we also have in Europe, and those are what you see in that line.
And the current level is sort of the run rate to be expected going forward.
Yes. Yeah.
Yes, at the moment,
Yeah,
that is what we expect.
Yes. Mm.
Yeah. Good. All right. Thank you. Thank you very much.
Thank you.
Thank you much.
Okay, we'll take the next question here. Can you quantify how much cost you might be able to take out based on your review of the footprint, etc.?
Well, practically, yes, we could, but we do not want to disclose that yet. Once we are done with or the analysis have chosen the scenario that we will implement, then we can go public with the effect of that. But I do not want to disclose that today.
Okay, thank you. Could you give us an idea for the rest of the year in terms of sale based on your order book and also margins?
Unfortunately, the answer here is quite boring as well. We don't make any financial projections, and therefore we will not. I cannot answer that, unfortunately.
Okay, thank you. And what are your expectations of net debt levels at the end of the current fiscal year in absolute number, if possible?
I think the same answer here is given that we don't give any financial projections, we also don't give projections for that.
Can you elaborate on the strategic agreement with a tier 1 supplier in Europe, and what kind of revenue potential does this VMI model represent?
Unfortunately, the same here, given that we don't disclose that. I cannot give you the numbers, but it's a fairly significant customer, and the VMI part will likely over time be all of that business will be with the VMI solution over time. And this is an automotive tier 1 to an automotive OEM, where we are having a lot of business, and we're happy that we also then get directed into their supply chains to help them with that as well. So the business as such is very nice, and we are confident that it will be a contributor to our profit over time as well.
And we'll take one final question here. How do you envision Bulten's competitive position evolving over the next 3 to 5 years, especially outside the automotive sector?
Yeah, I know a lot of people are curious about this, and as we have said, we will come back and give a presentation of our strategy going forward when we are ready to do that, which would be sometime during this autumn. But I do foresee that we will compete with a very customer-centric business model, and that I can say, and that we will be quite decentralized and try to be very, very close to the customer and run our P&Ls close to the customer. So we can be very quick, very service-oriented, and be a very, very good supplier to them. That would be kind of the heart of it, but more than that, I do not want to disclose today.
Okay, that concludes today's presentation. Thank you very much, Axel and Anna, for presenting and answering all of our questions. And thank you everyone who joined us today for this presentation with Bulten. And I wish you all a great rest of the day. Thank you very much.
Thank you.
Thank you.